Okie doke. Happy Monday. It is March 19th. We are joined today by Michael Hubbard. Mike Hubbard's a longtime friend of Bunker Labs. He's also a United States Marine Corps veteran. Thank you for your service. Say that already.
Thank you.
Today we're going to be talking about how to bake a cake, more or less. But more importantly, it's how we can take a simpler look at our financials and get a better understanding of how important it is to, project and plan for things ahead. So today we're going to go through basically what that looks like in the context of how to bake a cake. Not only do I not know how to bake a cake, but I can't really talk very well. It's great. We get some lights on today.
So we'll hit all of those topics.
Exactly. We're going to hit all the topics, and so stay tuned today on the breakdown. All right, and we're back. So, Mike, will you tell us a little bit about your involvement with Bunker Labs? I mean, I've known you for a couple years now. You've been around a little bit. What has your experience with Bunker been like?
Sure. So I got out of the Marine Corps in 2013. Came to work at William Blair in our investment management division. William Blair, for those that don't know, is an 83-year-old privately held full-service investment bank and global asset management firm. So we help companies grow, which is very similar to what the Bunker does in a variety of ways. And so I was fortunate enough to meet Todd in 2014 early on and really saw a strategic fit between what we do for companies and what Bunker Labs helping veteran entrepreneurs do. And so we've been sticking around ever since and working with companies and helping them understand the importance of financial modeling, why it makes sense to do, how can you do it right, not only for valuation purposes, but to run your business more effectively.
And how important is, we say a lot of times in our programs that focus on sales, focus on getting customers, just start making money, but how important is it for you to be also taking a deeper look into your finances? And is there any stories you have working with some of these Bunker Lab companies around, horror stories, maybe positive stories?
Sure. So there's two primary reasons to focus on financial modeling. One is you're going to sell your business, right? That's the best case scenario. Amazon comes knocking and you want to...
Look into the camera, one.
Got it. So Amazon comes knocking and they want to give you $1 billion for your business. Well, is $1 billion the right number? Snapchat was approached by Facebook several years ago and offered $3 billion. Snapchat said no, and now Snapchat's worth multiples of that. So how do you know? How do you know what your company's worth, right? When someone comes knocking and wants to give you what sounds like a big number, it might be and it might not be. So that's kind of category one. Most of us, unfortunately, don't get that opportunity very often. So what's the more practical reason to have a financial model and to kind of understand how to think about your business from a number standpoint? And that's the example that I'll give. Is I worked with a company here in Bunker Labs, and they had two very distinct products or services, two very different services, and they were split evenly among the co-founders. They knew that they were stretched too thin trying to do both, but they couldn't agree on which direction to go, which business they were going to shut down, and which business line they were going to focus on. And so I sat down with one of the founders and spent 2.5 hours building out a very basic financial model, building it out to 10 years and going through some of the key assumptions. And very quickly, in the matter of 2.5 hours, it became clear that one business wasn't scalable at all. It would require far too many resources to ever be a meaningful, sustainable business. And one business line scaled very rapidly and you could make a lot of money with little changes to your cost base, which is kind of the ideal business model as you think about it. And so what they had spent a year arguing over, we were able to define mathematically in 2.5 hours, and they were able to make a decision and move forward. So it's things like that really make a huge difference. Think about a year of your time and what you could have been doing if you were able to make that decision a year sooner, and you knew with greater confidence that you were making the right decision. So that's basically the gist of it.
Yeah, it saves you a ton of time and money.
Yeah.
And resources. And
right.
Everything, headaches.
Helps you make smarter decisions.
Yeah. So how would you, and how much, so these are the ingredients for this is what I call the Will Crane cake. is knockoff Teddy Grahams, 20 grams, and Betty Crocker
Andy's
Richard frosting. So for those of you who remember Dunkaroos, this is like
homemade Dunkaroos.
2018 version of Dunkaroos. But you have a more complex cake that you'd like to dive into. So I will allow you, sir, to grab a handful of
all right.
These.
Awesome. Dunk a couple of them.
Might set you back carbs wise.
Yeah, that's all right. We have to go to the gym after this.
Yeah. But so where does the analogy start here with if I'm starting a startup and I want to go and for starters, what is a financial model? You know, where would I even begin?
Sure. So to take the analogy to fruition, we're going to bake a cake. We're going to show what goes into baking a cake. So let's say we're a bakery and we want to sell cakes. Well, how much should I charge for the cakes? How many cakes do I need to sell to break even? What does it cost me to bake a cake? What if any are things that I need to buy before I can start baking a cake? Right, and laying that out so you can see exactly how many cakes you need to sell to break even. What if you adjust the price points of the cakes? How does that change when you're able to break even? When you're able to pay off your startup expenses, so the investments in capital or in property and equipment you have to make before you can even bake cake one. So that's what we're going to do. We're going to kind of walk through a simple example as if we were baking cakes and go through the different pieces of it. So the main pieces of a financial model are your revenue build. So that gets you to your revenue. And a lot of people just take last year's revenue and they multiply it by a % growth rate, and that gets you this year's revenue. And that's a good starting point, but you really want to drill into that and say, well, how many cakes am I going to sell? And at what price? And how are those two numbers going to change? Because in your revenue, you have two levers you can toggle. You can change the volume, so you can sell more or less units, and you can change what you charge for your product. And those two changes can have massive impacts on how much revenue you generate. And so most startups can get there, right? They're like, okay, I know I'm gonna sell 50 cakes, and I'm gonna sell them at $25, and they can get there. The harder part is then to take and build out your costs. So how much does it cost me to bake each cake? And what are the things that go into it? Because where people start to fail is they say, well, in year 5 I'm going to sell 1,000 cakes. Okay, well, how long does it take to bake a cake? An hour? Okay, well, so can you actually bake that many cakes per day in a year to actually get to that unit volume? Right? And those are the kinds of questions that you see stump people on Shark Tank, and when they haven't thought of it, they haven't gone through the actual math of, okay, I said I'm going to make 1,000 or 10,000 cakes, but it's actually physically impossible for me to do that, even if I were baking 24/7, 365 days a year.
Right.
So that's the importance of these models, is it helps you understand your business, it helps you sanity check, and it helps you pressure test different assumptions or changes that you can make and see how those would flow through. So revenue build, your cost build, and that gets you to what we call the gross profit line, revenue minus cost of goods sold. And from there you layer in all your overhead. So your sales and marketing, how much did it cost you to acquire those customers that bought the cake? How much is your rent? How much did it cost to buy 10 red staplers? Whatever the case may be, and that gets you, those are your operating expenses. And that gets you down to your operating income. And that's kind of a good proxy for how you're running the business, right? That's your managerial ability, the operating income line. Then you factor in interest expense and taxes, and those things are kind of your ability to manage the financial side. Do you take on more debt? Do you use more equity? How are you managing the financial aspects of your business come below operating income? So, and that gets you down to net income, and that's basically your P&L. And then you move into the balance sheet and cash flow.
These are all, it sounds like, you and me both are obviously financial wizards, but for those who aren't,
obviously,
let's, I mean,
so I ate another Dunkaroo.
Yeah, exactly. By the way, there's chocolate ones in here. I just found one. I don't know if that, yeah, see?
Yeah, thanks.
So let's pretend I don't know anything about math or finance.
So start with like addition.
Yes. Maybe. Yeah, exactly. So if I'm in the, like in this cake analogy, so now I'm not starting a bakery. I'm literally gonna go out and I'm gonna cook a cake. Do you cook a cake? Bake a cake. Bake a cake.
Cook it, bake
I
it.
don't know.
I think as long as you're not frying it in a pan,
chef.
you're okay.
Yeah. Exactly. So I'm gonna go fry this cake in my microwave. So there is. I'm trying to think about this from like a perspective of like an Excel spreadsheet.
Sure.
So there are. Yeah.
You want to go through it real quick here? So you have kind of what this is. It's a YO. It's not short for YOLO. We'll call this year 0. So before you start frying any cakes, you have to do some prep work, right? And then you get into year 1 of frying your cakes, and you're doing okay. And then year 2. So this is what this denotes. So in year 0, let's think about what are some things you need to bake or cook or fry a cake. Maybe something like
eggs,
an oven. Well, what before the ingredients?
Yeah.
I mean, you need some sort of utensil to cook this cake, right? So let's say you need an oven. What else? You might need a refrigerator, right?
Oven mitts.
Oven mitts, yep. Let's definitely include those.
Electricity, yeah. Refrigerator.
Yep. Oven mitts, a fridge. Keep those eggs cold. Maybe some mixing bowls, right? To mix up the ingredients. Maybe some wooden spoons. So you get the idea, and there's costs associated with all these. So maybe an oven's $500, and oven mitts are maybe $10, and a refrigerator, we'll call that another $500. Bowls, maybe $100. We'll get really nice bowls.
Yes, nice bowl.
And then maybe $40 on spoons, because you can never have too many of those. So you add all that up, and you've got $1,150 negative that you have to spend before you've even bought a cake. So year 0, you're down $1,000, plus or minus $1,000. So then we'll say, okay, year 1, well, how many cakes are we going to buy? So we'll start with number of cakes. And let's just say we do really well and we sell 25 cakes, 2 cakes per month. I think you can handle that. You probably need some practice, right?
What kind of cakes are you making?
It might be 0 in year 1, yeah. And then what are we going to charge? What's the price per cake? So if you were going to bake cakes, what would you guess your price should be to sell a cake? $1 million?
My kind of, like, if I was making it, it'd be good cakes. Maybe $1 million. And $1
million. Maybe
I'll do $100.
$100 per cake.
Easy round number.
All right. So then that gives you your cake revenue.
We might have to flip this board over. I don't want to go below this table here.
And so that's $2,500. See how good my mental math is today. So that's that you've spent $1,200, call it, and you're going to generate revenue of $2,500 in year 1 if everything goes well and people are willing to pay $100 for this cake, right? So that's your starting point. Then you if you want to flip it over, or we can just erase. So then
So we're positive. Year 1.
Well, so far we gotta. So we'll say equipment here, right? And that's negative 1,200. And then we'll say number of cakes, price, and we said 25 at 100. And so we're at revenue of 2,500 in year 1.
Yeah.
So things feel pretty good, right?
Feeling great.
But if you want to make
good 25 cakes.
Yeah. If you want to make cakes that sell for $100, you need slightly better ingredients than the knockoff.
No offense, Annie's, but
the knockoff. So So let's see, maybe your ingredients cost you, let's say they cost you on average $60 per cake,
Okay.
right? So we'll say ingredients cost 60, and then you multiply that by 25. Not that smart. So you're at 1,500.
Look at
1,500.
this calculator for a second. Where did you get this calculator?
Oh, those are standard issue at
Oh,
William
okay.
Blair, yeah.
The old
Super
Hewlett Packard.
fancy, yeah.
Cool.
If anyone out there wants to sponsor us for calculators.
Yeah, seriously.
Well, you can get them. You know what's funny is there's an app for that now. So I actually I have the HP 12C app on my phone.
Instead of the calculator app that comes
Yeah.
standard on every single
Yeah,
phone.
exactly. It just makes sense, Will.
Right.
So your cost of goods sold are $1,500. So your gross profit, as we talked about, is $1,000. So you're doing pretty good, right? You're in the black.
Yeah.
You managed in this great example to not spend more on your cakes than you're charging them for. That's kind of step one, right?
Yeah.
Is a lot of people are spending more to manufacture their products or create their software or whatever it is they're selling than they're actually charging. So this is a good quick way to see if you're doing that.
Uh-huh.
And then we get into sales and marketing, right? So we'll abbreviate that sales and marketing and general and administrative. So this is what it costs to acquire these 25 customers, and this is what it costs to live in your mom's house where you're baking this cake, or as you graduate into a nicer place, bakery. So sales and marketing, it ranges, but for a small business early on, you're probably looking at anywhere from 20 to 40% of your revenue, right? So let's split the difference and let's say 30% of 2,500. So you're at $750 just to get those customers.
Mm-hmm.
And then G&A, we'll call that your overheads maybe 10%, so another $250. And so your total operating expenses are $1,000.
Shit.
Yep.
Uh-oh.
And so the problem is your operating income, therefore, is 0, which isn't awful because it could be negative at this point, right? Like a lot of companies overspend here and here.
Yep.
You buy the big office before you have any employees.
Mm-hmm.
So we say, okay, so now in year one we lost $1,200. In year two we didn't make or lose any money, so we're still down to $1,200. And so what are some changes that we can make in year two? Sorry, year 0, year 1, and year
Yeah.
2. What can we do in year 2 to try and get this positive, right? And so, as I know we're running tight on time, but this is where you start to play with your model and you say, okay, well, what if we baked twice as many cakes and we charge the same amount, right? And so
Ingredients
then,
double, right?
yep, so that's 5,000, your ingredients double, more or less. Maybe you can get some economies of scale as you get bigger. So 6,000. Is that right?
Yeah.
Oh, that's why. Yeah, so this would be 15,000. And then 50 times 120.
It's the Hewlett Packard calculator that he's having trouble with, everybody.
No, I'm sorry. We got it right. We got it right the first time.
So it's $5,000. Should use the app.
Right. So this is right. 5,000. And then you have 50 times 60. So your cost. This is the problem is our cost per cake didn't double. We just doubled the amount. So we didn't. That would have been a bad assumption. You can see how you catch that, right? Because you have $5,000, all of a sudden you have $6,000 here, and you're in the red, right? So you're like, something must be off. So we're not doubling the cost per cake, we're just doubling this number, right? So the cost per cake is still 60, but this number's 3,000. So that's a nice way for you to, again, sanity check things. When stuff doesn't make sense in your model, you can go back and say, okay, what did I mess up? Right? And so then you're at $2,000 here, and you have an extra $1,000 to play with on sales and marketing. And so let's just say you kept these the same, you spent the exact same amount of money. And so now instead of $0, you make 1,000. And so now after some point in year 3, you will have recouped your initial $1,200 that you invested in this business.
So like by creating something like this where you can change one set of data, like let's say you do it in Excel, by changing one thing you can dramatically change the outcome to everything. And this is what I think in the example you were saying earlier on, that like you can look great year 1, year 2, year 3, but then as you bring on like another employee or another 10 employees, or you start doing more programs or start making more cakes, 10 years down the road you could see some sort of like plateau or exponential decline. Things get really expensive really quickly, and this allows you to go in and prevent those things from happening, or to see them before they happen, right?
Right. And, we were pretty conservative in our initial equipment.
Right.
So you could easily go out and spend $10,000 on a fancy oven and a fridge because you're about to start the world's best cake baking business. And so then, so I did an example earlier, and my startup costs were $3,000. And the best I got to, and I lost $40 in year 1, I made $185 in year 2. So then you think about that, over the first 2 years you lost $3,100 and you're making $180 a year. It'll take you 17 years to recoup that initial loss that you spent on this, right? So that's what you want to think about. Can you get by with a cheaper fridge? Do you need the $10,000 fridge that's going to take you 20 years to pay back? Or can you lease a fridge? Can you lease an oven? Can you rent space? And then you can change these inputs and see what happens and the impact on your business. And you can replicate this. Let's say we want to now test vanilla versus chocolate cake, right? And you can replicate this model for a vanilla cake and for a chocolate cake, and you can see maybe you can charge more for chocolate cake. I think most people like chocolate. And so then you can see which products are most profitable and most beneficial within your business. Another company I worked with had, probably over 100 different products, had no idea which one generated the most profit for his company. So we went through each product. What's the selling price? How much does it cost to make? And very quickly he's like, well, I don't want to sell these 75 products anymore. I want to focus on these 25 products because these are the most profitable and these are the highest selling, and I'm just wasting my time on these other 75 products.
So you do this stuff in advance. I mean, you could theoretically do this before you even start your business.
You should do this before you start your business.
Right? Yeah, exactly.
Absolutely.
Why now I'm back?
Absolutely do this before you start your business. And even as you continue to progress through. I mean, this, like companies, large companies that we deal with, publicly traded companies, Apple, Microsoft, whatever, there's still people building models like this going out 5-10 years, projecting by product line. And so Apple knows exactly which model of the iPhone is most profitable. They know exactly which model sells the most. They project it out, and they also keep track of it in this level of detail and much greater historically, so they can see trends in their business.
Right. Is there like some place on the internet that you might recommend that people can go and get like a template version of a financial model that they can go and input their numbers into, or is there anything things like that exist?
There's a few resources for getting better in Excel. There's a company called Training the Street, so you can go out there and they have a lot of tutorials to make you more efficient in Excel. Because like I said, what took me 2.5 hours to build with one company could take could take someone a week or a month if you don't know what you're doing in Excel or kind of the best practices. It's really tough. We've tried really hard to come up with a generalized template that works for any business. Most businesses are so different that it's easier. It actually takes less time if you start from a blank sheet in Excel and build what makes sense for your business than trying to rebuild something that's already half-baked. No pun intended. Come on, you're gonna give me a better laugh than that. Man,
I know,
tough crowd. Shoot. Note to self, never make that joke again.
Is that your notes?
Yeah, I've been practicing that for weeks. Well, thanks for not laughing at it.
There we go.
So yeah, I think it's tough. We've tried to create a template. Your best bet is to start from scratch, get something down, and then show it to your mentor. Show it. You're welcome to email me or anyone else at William Blair and get help. Show it to your other business partners and continue to refine. And it's something that you'll always be tweaking and playing with.
Awesome. Well, Mike, thank you so much. I think it's really helpful. Anybody has any questions, please put them in the comments below. We'll try to get those answered for you.
Yeah, absolutely.
Thank you very much.
Thank you, sir.
Any parting words? Do you want another quick bite?
Yeah, I'm going to go nuts after we shut the cameras off.
All right, cool. Well, I hope you enjoyed this. Thank you very much for tuning in, and we will see you again next Monday.